Thank you so much for your time, Opeyemi. And let's look at what's playing out in the markets today for you. From the earnings you've seen so far, which has impressed you?
My pleasure, Kenneth. So I think the market is still being driven by the low yield environment. In terms of earnings, I mean, last year, I mean, everyone expected that the pandemic was going to lead to, lower earnings across the board. But for the consumer sector, we like, the performance of flour mills. The stock has been quite defensive, and earnings have been quite defensive. We've seen top line grow at double digits over the last 5 quarters. So this year, earnings are already up by 31%. This is according to management due to strong volumes. Management continues to invest in its distribution network and route to market. So, the likes of NASCON and Dang Sugar, who haven't released results yet, but also belong to the same category, we're expecting some positive results from them as well.
All right, now looking at the market performance this week, though, we saw that the telcos hold sway in this week, and we saw Airtel Africa as well giving a notice about the spectrum that they just got approval for. What do you make of what we're seeing play out in the telecom space?
Yeah, I mean, the telecom sector really is the sector in Nigeria that has the most attractive upside potential. That is why we've seen this week, it's Airtel and MTN that are running things in the stock market. The news on the spectrum renewal came in this morning. I think it's quite positive. Airtel renewed the 900 megahertz and 1,800 megahertz bands. So, I mean, in the past, the group has used the 900 megahertz band in 3G and 4G tech to improve coverage, in addition to using it as one of the drivers for reliable 2G coverage. They employed a similar strategy with the 1,800 megahertz band to roll out 4G technology. So this has pretty much helped them secure, multiple layers of data capacity. So, as they continue to expand population coverage in Nigeria, we expect that, this will help in that area. Positive news overall.
All right, now for looking at the consumer space, so in the first quarter of the year, when you look at activity playing out so far, the operating environment and how do you think they would have fared when your earnings come, especially in the fourth quarter of the year where we saw the festivities play out?
Yeah, so from the results we've seen so far, I mean, festive-induced demand was not as significant as we've seen, in previous years. I mean, this isn't unexpected. Nigeria is facing significant inflationary pressure. We're facing currency weakness. Wages are growing below inflation. All of this is putting a lot of pressure on the consumer wallet. So, it's not likely that we will see, fantastic top line performances or, bottom line, barring any other factors for these consumer goods companies. 2021, I think, is going to be more of the same. Consumers are more price sensitive than ever. We're going to see a lot more down trading. Margins are going to continue to be put under pressure due to the inflationary environment. All of this just points to a tough near-term outlook for the consumer goods names.
All right, interesting times when you look at what's playing out in the markets, and I'm quite curious at what your expectations are for the banking stocks.
Yeah, I mean, the banking stocks, have always been the darling of investors in Nigeria. Last year, we saw a lot of gains from trading income and FX revaluation gains. For this year, 2021, I think earnings are going to come under pressure. NIMs, we should see pressure there. The low yield environment doesn't particularly help in that area. But an upshot, really, I think in the medium to long term is the hold co structure that a lot of these banks are mulling. The likes of GTB going into pensions, payment space, fintech, and the likes. All of those should help, diversify revenue, and improve earnings for these names.
All right, now when you look at the performance of the equities market last year, towards the last quarter of last year, that flight of investors from the fixed income for the money markets to the equity space was part of what we saw gave the markets that bolster and that for it to come up with the kind of outcomes that we saw at the end of the year. Do you think it's going to be more of the same when you look at especially what happened with the first bond auction that we saw this year and how sentiments have been so far at the auctions?
Yeah, I mean, at this point, we have a yield curve that is steeper than we've seen in a long time. You know, investors are really wary of where yields are in the market at this point and are pushing, for high yields. But the government, the FGN, and the DMO are also pushing back and are trying to manage the situation. You know, um, uh, you know, paying extremely high rates for borrowing in the past is not something that the government wants to do going forward. According to the feelers that we got at the last MPC meeting, the theme for yields really is lower for longer. So we're expecting that yes, there might be some slight uptick in yields in the market. Yields it's not going to be enough to provide a positive return for investors. As a result, we should see that the bull market in the equity space should continue in the medium term until we see the MPC kind of change direction and move maybe towards more of a tightening cycle once the economy goes back into growth, which we're expecting maybe in Q2 2021.